The world has turned into a vastly different place over the last couple of months, with the coronavirus pandemic outweighing what would, in a normal year, if such a thing exists, be a weather market. In response to the global slowdown has been a crash in oil prices, which has set the tone for a lot of grain and oilseed markets. Retreating from over $65 a barrel at the start of the year, nearby Brent crude has now regularly traded below $20 a barrel, with cuts to demand outweighing any curbs to production. With stockpiles and storage filling up and no immediate prospect for a return to mass global travel, crude markets are likely to remain under pressure for the foreseeable. Falling fuel demand and specifically cuts in ethanol demand have also hugely impacted global maize markets, with nearby Chicago maize futures falling by over 20% since the start of the year and reaching levels at which EU import levies are enacted. With ethanol stocks recording consecutive record highs, maize prices are likely to remain under pressure even after travel restrictions are lifted, especially combined with an ahead of schedule large US maize area being planted again for 2021. While maize has faced continual pressure, wheat markets have recorded a greater degree of volatility. Panic buying and supply chains catching up drove a spike in global wheat markets during March, yet subsided once this had caught up. However, we then had support once more, this time from Russian export quotas and dryness concerns in Ukraine and Russia. However, with these supply risks now largely known and a degree of rainfall forecast, both old and new crop markets face the prospect of a drifting market once again, facing little new significant bullish factors and all underpinned by a large spread to cheap maize. Pressure in oilseed markets has also come from a global pandemic and related downturns, with reduced demand for oil not only in biodiesel, but also for food service. Restaurants have shut across the world, impacting all aspects of the vegetable oil complex. Some support has been provided, with demand pickup from reduced availability of distilling byproducts. However, positive planting progress in the US for their soybean crop and previous concerns about dryness in South America largely abated, the long-term oilseed complex prospects are for a continued depressed market for the foreseeable.